Good morning, everybody. It's Reno Viola. I am the mortgage guy for Mortgage Alliance. Of course, we're part of the Ontario approval team. My flying mate, my airplane machine, mortgage machine, of course, this morning is none other than Miss Sandra Brown. Good morning, Sandy.
Good morning, Reno. How are you doing today?
Wonderful.
Anyway, I am the mortgage broker, and I'm so excited because I guess my mortgage commander quit because he's not here anymore.
What, the commando? No, commando's right here. Mortgage guy, mortgage commando, same guy, same guy. Listen, I can be different things to different people, and usually I am, and that's what we are. We're actually, if you look at that, if you look at that, we are the mortgage guy or girl. We're also the mortgage commando because we know what it takes to go trekking through that thick bush, the woods that the commandos go through in order to get to the other side to get your mortgage done. And that's why we help you. And that's why we call ourselves the mortgage guy and the mortgage commando.
So and that's a good point, Reno, because, we're not just here for the easy people. We're here to help people get to where they're going. It may take them like a month or 2 months or a year. But today what we're talking about is refinancings and all the advantages of refinancing and why you would do it. So let's talk about that, Reno. We're going to talk about how we go about doing it, what it takes to get it done, and what the benefits really are.
Okay, and you know what? That's a huge word, and the word just on its own, refinancing is daunting. I mean, it's, oh my God, I got to refinance. What the hell does that mean? Well, it's a way of you taking advantage of the equity that you built up in your home to perhaps buy another house, perhaps go on a vacation. Perhaps, well, the best reason would be to pay off those 40% interest credit cards that we all have them loaded up because of COVID. So there's a bunch of different reasons why you'd want to refinance. And one of the better reasons even is just, let's go get the lower mortgage rate. So if you're paying $1,015 a month now, we might find a rate where you're paying $998 a month. So just that saving.
That's the point you had. So the biggest thing here is getting that interest rate, that excellent refinance rate that's out there. So like right now, instead of paying that 20% interest, that really all you're paying every month is just the interest charges. You're taking advantage of a 2% or a 1.84% or whatever interest rate that is by reconsolidating that debt. Not only by doing that, you're actually improving your cash flow. Because now that you have these big payments before, you're actually taking it down to where you've got one simple payment of a mortgage payment. And it's not that complicated.
We're going to keep referring, I know it doesn't show up very well with the green screen, but we're going to keep referring to this worksheet that we use, and it's called Dreaming of Becoming Debt-Free, the sheet is. And basically, we take all the debts you've got, existing, credit card debts, car debts, whatever it is that we want to roll into this refinance with your mortgage. And before we actually do it, we actually share with you, or you share with us, and we share together, is it going to be worth doing? And you know what, at the end of the day, if you're going to save $100 a month, yeah, maybe it's worth doing, but probably it's not worth the trouble. However, most cases, and I'm pleasantly surprised most times, we're saving $800, $900, $1,500 a month, depending on the kind of debt that you've got there that we're trying to roll in. And it makes so much sense to roll it into a one-stop payment plan. Basically, you're going to pay one loan, which is your mortgage every month, and all of those loaded up credit cards with the 25, 30, 40% interest disappear. You still have the credit card, you can use it, but that locked in portion of that debt that you can't seem to get rid of.
It's not even about just debt though, Reno. It's about investments into your future. So simple things like, many people love to do that camping thing in the summertime. So whenever you go buy a camper, your interest rates are 7, 8, 9%. So right now, especially if you're up for renewal, now is the time to plan that we do the line of credit attached to your house, that you actually have that. You can go buy your trailer that you're buying. They're $30,000, $40,000, $50,000 at 7%. Imagine the savings you're going to have by just using your house to do that. Other things, some people like to buy timeshares because they like to travel. although traveling right now is not the best time of year to do that. But it's not always just about consolidating debt. Sometimes it's you have a future plan, you want to buy a cottage, you want to buy something different. This is the time to take advantage of the low rates.
Actually, you know what? As we keep talking, I'm going to give you some practical examples of what actually happens. So Sandra, keep talking for just a minute until I find my worksheet from last week on the
So
9 or 10
Reno, you
people.
just keep going in and out. You're like, you're not just a commando now. You're actually like a digital person that just disappears.
Oh, I saw that. That's cool. That's because of the background. But anyways, it is what it is. You know what? It's digital. The world is all digital today. And I don't know where that sheet is right this second. But basically, what happens with our own customers is we keep getting printouts. And basically, it does the math, sort of the math, because we don't know everything. But the math in advance, it says, okay, look, right now, with the interest rate that you had 2 years ago is X amount of dollars or X amount of percent. Right now, the interest rate is, here it is, 2%, 1.9, whatever it happens to be. So there is a savings right there. It's a really apparent savings, but it doesn't seem like much because if you're dropping down from 3.1 to 2.1, it doesn't really calculate in your head as a saving of a lot of money. But basically, we continue to prepare for that conversation by saying, okay, look, it's going to cost, for a new lawyer, there's going to be some cost. There's no question about it. So you're going to spend $1,000.
That's the scary part, Reno, because as soon as you hear the word cost, it's going to cost me to do this. You go, oh, I can't do that. But in reality, if we showed you on paper that in 5 years, you're actually going to save money by changing your rate and going lower. Yes, you're going to pay a penalty. Now, of course, every lender is different. And we always suggest contacting your lender to find out what it's going to cost for you to break your mortgage as of today. Okay.
And you know what? That penalty that you're talking about, it's going to cost something. There's no question about it. If you have a 5-year contract.
With the rates going down right now, with the rates going down so low, we're discovering that there's a lot bigger penalties. But again, those bigger penalties may make sense to pay in order to save in the long term. It's not necessarily about today. It's about the long term of that 5-year. And also, if you're saving what you're going to pay in the penalty on your mortgage compared to what your rates are on your credit cards, you're still saving money.
Right. The conversation has to be a full conversation, because as soon as one of us says to you, okay, look, you're going to have to spend this much money for lawyer fees and that sort of thing in order to save $11,000 over the 5-year period. And all you hear is, you don't hear the $11,000, you hear the $1,000 lawyer fee, and you forget to talk with us. There are some of these lenders who do refinances who will eat up that $1,000. We have to just find the right one.
Absolutely. Some of them do.
They build it into the tax. So it's not a physical cost in most cases. It's a cost on paper. But if that $1,000 that we spend together on lawyer's fees, which is protecting you anyway, is going to cost you, or going to save you $11,000 over 5 years, that's probably the best investment that you'll ever make in your whole life. $11,000 in a savings is unbelievable. So be prepared for that kind of conversation. If you're serious about refinancing your home for whatever reasons, some of the reasons we mentioned earlier on, it's not okay, you're in this mortgage today, tomorrow morning you're in something else. No, it's not that easy. We have to do some work for it. And it's taking you generally from one lender to another lender. Which, by the way, there's no reason to be loyal to the lender you've got. They've been good to you. That's great. But remember, this is all about saving you money, not the lender money. So don't be embarrassed to better yourself. And by saving you money, that's how you better yourself.
Yeah, and that's the point. Let's face it. Life changes. Our families grow. Our families get smaller. We have new plans in life. Sometimes we want to maybe start a new business. We might want to do other things. It's just life changes. Nobody expected COVID-19 to happen, or COVID 2020, and hopefully it stops at 2020 and not go forward. So it's helping you plan for your future goals. And many times that future goals is as simple as buying a cottage. It's easier to get the equity out of your home to buy a cottage than it is to go to a lender and say, I want to finance a cottage.
Right. I think of how powerful the comment that you just made is. None of us have crystal balls, but if 2 years ago you had to buy, and I don't mean pay cash, I mean buy another house in the Ottawa area or Kingston area, and you would have paid, $250,000 to $350,000 for a very nice house 2 years ago. Today, that same house is worth probably $500,000, $600,000. So
Well,
there's
from
no
personal
way,
experience,
there's no way that you could have invested someplace else and made that kind of money other than real estate.
for example, so I'm actually a perfect example. I owned a house in Limoges. 7 years ago, I sold that house. It was a townhome in Limoges for $250,000. Today, that exact same townhome is worth $400,000. And that's in Limoges where there's nothing. Same as in Stittsville. I sold a property for $285,000 7 years ago. Today, that same property is worth $430,000. So obviously, if you're patient, real estate is not going to kill you, for sure. That's a nice way to invest your money. So taking equity out of your current home to buy that new property may make sense. Rental amounts in the Ottawa region in particular are just gone, actually everywhere. They're going skyrocket. It's nothing for rental amounts to be $2,000 a month. So take that, make it to your advantage, save money, your own money, use other people's money, especially at 1.85 to buy a property right now. It's just unbelievable that the rates are that low.
Yeah, and again, you know what? This is not a thing that you're going to not lock into, but just do. It's just, it happens. It doesn't happen. It will not happen. This is a refi of your property that you already own in order to take out some of the equity that is already yours. So yes, you're borrowing, but you're borrowing from yourself because the equity is yours already. In a lot of cases, and most of us don't understand how much equity we have in our houses, but in a lot of cases, we've got $150,000 worth of equity in there that is just sitting there doing nothing. So if you took that $150,000 and you found a rental property, let's say, I don't know, your Cornwall area, you might find that $250,000 rental property. And you took whatever down payment you needed out of your home or that refinance money and put it down on that rental property. And now you've got, say, $3,000 a month in rent coming in on that property. So not only do you
Oh, no.
have
So Reno, you're kind of
$3,000
going a
a
little
month to
digitally on
service
it.
the debt.
You just kind of
What's
went in
that, what's going on?
You just went in and out. So there's something going digitally with you. So we're gonna have to work around that today because you're kind of like Android.
You figured out a way to cut me off. So somehow you're pushing buttons to cut me off. Is that what you did?
Well, I tried, but you just there's no mute button for you.
No filters either. But anyway, the point is make an investment in yourself. It is for yourself that you're doing this. That there's nothing like the great cash flow that a rental property will bring you, the right rental property, not a slumlord. I'm talking a right rental property that will bring you money. Not only will it bring you the money in order to be able to service the debt, it'll also bring you that increase in value that it's going to happen over the next couple of years, continue the next couple of years. I don't think that the bubble is going to burst or just.
Our region is finally coming up to market value. So for many years, the Eastern Ontario market was not the same. It was just basically slowly slugging along and getting you to where you got to be. But now when you're buying around Ottawa and even those rural markets like Cornwall and Pembroke and Arnprior and Carleton Place, they're becoming hot markets. Everybody wants to own in those areas. So with that happening, you've got a chance to grow your funds. I know I have bought a property in Pembroke. It was worth $185 when I bought it. It's now worth $250. So when you look at those, you cannot get that kind of interest return on your investments.
Anything.
Yeah, anything. So who can get that kind of return? I can't see it. So the downside right now is there's not a lot of housing out there. So you got to be competitive. You got to be ready to jump on deals whenever they come your way. So the best way to do that is to get yourself set up where you've got the cash flow and you know that you're in a good position to just jump on it. You don't have to say, well, I've got to see my banker. You're already talking to your banker. That's us. We're better than a banker. We're brokers.
I like that.
Right? Oh, there we go. Look at that mute button's kind of working. It's sticking though.
There's a lot of bees in there. Okay. So, and the other thing is, if you're buying a rental with this money that you're going to refinance your home and get it out, it says that my internet connection is unstable, by the way.
You're unstable, but that just proves it.
Okay, remember,
yeah.
This is a rental. This is not a home that you're going to live in. Okay, so yes, it's probably impossible for someone with a regular, normal kind of a job with, under $100,000 who already owns the house to own, another $700,000 property to rent in Ottawa. It's probably really going to be tight, but maybe we can take a look at it. Don't be afraid in a rental property to find markets that are not as affected by the increase in rates. Well, Cornwall, Pembroke, Arnprior, any place like that has still got some decent price houses that your refinance will put a big chunk of down payment on one of those properties. So your return on investment is going to be absolutely huge. And all of this comes through refinancing. So you got to get out of your comfort zone. And I tell you what, it's a horrible comfort zone because you're there, everything's going smoothly. You've got this equity in your home and you don't want to make yourself nervous. But if you can get out of that little bit of nervousness for 5 minutes, we can show you what refinancing joys can bring to your life. It's just unbelievable the difference that it can make.
And it never hurts just to have the conversation. You may have the conversation and go, you know what, this is not for me. I don't want to proceed further. But yet, why not talk to your person? That's us, your people. You got people. You have mortgage people. And the good thing about mortgage people is we have answers and we're going to help guide you. And it could be maybe not today that you want to do it, maybe 6 months, or maybe you're up for renewal and you just want to get the plan in place. Keep in mind, we can actually hold rates for 120 days. So let's do it. Let's get on this. There's so much more you can do, making your money work for you and using your equity in your home to do so.
The other answer that I keep getting is, well, I've only been in this home 1 year. And then we usually hang up and then, sometimes something happens, sometimes it doesn't. But I had a case where I did a customer exactly 1 year ago, moved from out west to Ottawa area and bought a house for, I think it was almost $400,000. Anyway, a year later, we get these pamphlets in the mail from our survey people, our appraisal people, to show us the appraisal they did last year, 400,000, what that actual house is worth today. And this one here is worth a couple of $100,000 more. So I sent that to him and he said, well, Reno, I've only been here a year. It was and it is a gorgeous house. And I don't think I'm going to do anything. Anyway, within 30 days, he called me back. He says, I always wanted 4 bedrooms rather than 3. So your refinance idea, I want to take advantage of it. And so that's what we're doing right now. We're going to refinance his house. Remember, he's got almost $200,000 worth of equity in this thing. Okay. He didn't do anything different from last year. He's got $200,000 like having a bank account that you live in. And so he's going to take some of that equity because he doesn't have the cash. And we're going to use that as a down payment on a new build, okay, which is going to be 5 bedrooms. And it's not going to be ready for another year. So take the money out of there. Use it as a deposit down payment on the new build. That new build, $600-700, depending on what for extras, what he puts into it, and the value that it's going to increase in a year. So by the time he moves in, it'll probably be worth $800,000, all from the refinance of this $400,000 house.
And that's a good point. So especially when it's new builds, they tend to have a better growth in value, because I know that property I was telling you about in Stittsville that I bought a brand new, was 185, and today it's worth 430,000. That's about 10 years ago when I bought that property. So
how much can you take out of your house? And that's what we're talking about, refinancing. First off, we all know that interest rates are so great today that, if you bought a house or you refinance your house or your mortgage renewed, or whatever it did 3 years ago, those rates are going to seem archaic compared to what they are today. So we know the rates are great.
Reno's favorite saying is, take advantage of these lenders now while they're giving you money to buy a house. Right.
And it's free money at this kind of interest rate. It's free money. So we know we can beat the rate, so that's not the question at all. But how much can we get out of there in favorable terms for you it remains the question. How much do you want to use to pay off debt? How much you want to make use to do investments? It's a different thing, and that's what we're going to help you figure out. But we can take up to, under normal circumstances for best rate kind of scenarios, we can take up to about 80% of the equity you've got in your home. That's a lot of money. So you're going to leave 20% in your home, in your existing home, and then you would be able to take 80% and do whatever it is that you need to do with that refinance. So guaranteed, we're going to get cash out of there. Number two, we're going to get you definitely, no question about it, a lower interest rate than you were paying before. Number three, which is the biggest one of them all, if you pay off, forget buying another house if you don't want it. We don't want risk. That's fine. That we sometimes understand. It's not for everybody. Consolidate debt. Those credit cards that you're using are great to have, but if you've got 5 of them at $25,000 each, loaded up to close to the max, or way up there, you're paying.
Okay, we're going to be on. Here's our own personal story. We actually have a TD credit card that we have charged up to $10,000, and it says now it will take you 100 years to pay this back if you just paid the interest. Or just pay the minimum payment.
This stuff up. Look at your credit card statement. Tomorrow, go after the show. Go and look at it, and right on the right-hand column, 2/3 of the way down, which is where most of them are, it says if you keep making the minimum payments on this card, it will take you, and whatever year it is, it might be 88 years, it might be 72 years. I don't know. It might be 3 years. Go and take a look. In our case, it's at 100 years.
It's crazy. It really is insane. So I don't understand that. And I know we went through that stage where we said, okay, you know what, this is stupid. Let's just reconcile the debts, pay off all the credit cards so that we have that cash flow. And that's why we get really onto this, saying it's 1.84 on a refinance. I think it's 2.04 right now.
Look at that.
Look at that. They're lining up, Reno. They're lining up for mortgage.
This is beautiful. This is such a hot offer that we've set off the smoke detectors, and they had to come and test the whole building. Okay, so trust me, it is a hot offer. Look, I want to get a couple of things in here. We only got 6 minutes to go. So I want to get and you know what? Call us for the refi. We'll explain it to you. We'll figure it out. And if you know what, after we show you the numbers, if you don't like the numbers, say no, and we'll walk away. And that's good.
No thanks. That's an okay word for us. Thanks, but no thanks. And we can always keep talking, and we'll keep in touch so that we make sure that you're getting the right offers for you, right mortgage, right everything. Reno, what is it? I know that we keep muting you, and you have so much to say. What is it you got to say?
Okay, so we have some questions that we should answer, right? We're at that point of the show. We need to answer some questions. But why don't we just do a live, because we're working on a deal right now. One of our agents is working on a deal right now, and see if we can't figure this out. Okay, so client has 20% down, wants to buy an oddball, illegal duplex in Cornwall. Okay. She's already a tenant in one of the halves, so she's already there. So remember, that's important in this because now she's owner occupied, right? Mm-hmm. So there's more favorable terms. She obviously she doesn't have a full-time job, but she works 30 hours guaranteed at about $20 an hour, and she's been there for about 7 years. Has debts that will be paid off before deal going through. And the vendor is willing to take back some of that. Buyer has apparently poor repayment history in past and previous collection.
Okay, you're putting me to sleep, Reno. Let's get to the point. So she wants to refinance her house. Is that what it is?
She actually is a tenant in one of the houses. She actually wants to buy it. So it's not about refinancing.
You said it's an oddball, illegal. So how's that going to help them whenever they're doing a refinance?
Right, and that's the key. So when you guys are, when you're thinking about, doing different things within the mortgage industry, I'm talking to you as a consumer. If you want to refinance a duplex that you already own, that you're living in, but it's not a legal duplex, and you want to use the from the other half that is illegal, I can't use that rent towards qualification. I can't use it.
It depends on what you're trying to do, though, Reno. It depends on what you're trying to do, and it depends on the client. So I'm going to disagree with you on that one. It's not that you
I know
can't.
you always disagree.
We got to know what you mean by illegal. Do you mean it just doesn't have a kitchen? That's one thing. But if it's another place with a full kitchen and full bathroom, it may not be so illegal as you call it.
Right. And so that's where the key comes in here. You've got to have a conversation with a mortgage agent that has some avenues to be able to work around the situation that you want. Like I said, I took this from a live text seconds ago that came in from one of our other agents, but it's applicable to us. We get these all the time. And we get customers that basically say, I got 20% down, I got 30 hours, little stuff like that, which is good. We need it, but don't tell us the rest of the story. And we get the rest of the story, we might be able to help this person as you're refinancing. If we get the full story on your refinancing, what you plan on doing with it, how long you plan on, you're buying another house, how long you plan on before you flip it, or how long you're going to hang on to it as a rental. So if we get the full story, we're not only mortgage brokers that can provide the money, we can actually physically provide answers for you that will take your planning a few years into your new venture of investment properties. So that's the kind of thing I want to encourage. I want you to encourage to have a conversation with your mortgage broker. And you know what? If it's not us, it's not us. That's okay. Mortgage brokers, most of them are super intelligent. So most of them, if you talk with them, they will help you figure out the best way around this.
That's right. And it really is about having that conversation so we understand your story, because no one person is the same as the next person. We all have different stories, and there could be a valid reason for things that are going wrong. And if you're just going into your bank and saying, hey, I want to refinance because I need to pay down my debts, and they're saying no, they're not always the answer. We are the ones with the answers. We have other options available to us, and we can present you those options. We're going to explain to you what they are and why they're there, so that whenever you go forward, you're not getting discouraged over and over again. Just don't take no for an answer. Get a second opinion at least. And us as brokers, that's what we're here to do, is provide you with that second opinion.
That brings us to a really important point here. You walk in, and you know how much I dislike banks. Overall, I like banks, but you know how I feel about banks. We don't need to hammer that nail on the head.
You do it every week, so why change now?
Well, it's true, okay? But here you go. You walk into a bank, and you're going to talk to a 21-year-old child who's sitting behind that desk about refinancing, okay? And you're going to count on their advice. And not only don't they know anything about refinancing, they don't know anything about ownership. So if they don't know about ownership, how can they possibly advise you the best route on your refinance? You got to have life experience. You've got to have team people who know what we're doing. And in our team, we've got a lot of people that even if Sandy and I don't know, there's very few things that we don't know, but there are some, we can go to our teammates and say, hey guys, this is what I got. And we do. We get together and talk with these people. Okay, this is what I got. And somebody has a solution. One of our folks has a solution for one of our customers. Guys, we've run out of time. Sandy, get it in, and then we'll get out.
All right. Thank you very much. Have a great day. This is Sandra Brown signing off for this week. Look forward to seeing you next week. And there's my lovely co-host.
Reno Viola, we definitely will see you next week. Bye-bye.